Today we're going to focus in on global growth and continuing positive signs that the rest of the world is catching up to the US, and we're seeing a genuine broadening in the growth impulse. My name's Kevin Kidney. It's the 1st of May. Today we're going to reflect on April and the continuing signs, particularly in the Eurozone, of a real inflection point in GDP. Over the last few days, we've had growth numbers for Q1 from Germany, Spain, Italy, France. Constructively, all of these countries surprised on the upside with their GDP numbers. Rumours of a recession in the Eurozone are way overdone, and in fact, we're seeing a positive growth inflection which should build momentum through the rest of the year. And in fact, the nominal GDP outlook in the Eurozone remains very strong. We're likely to see nominal GDP, which combines both the real component and the inflation component. It should probably be around about 3 to 4%. So there really isn't that much need for the European Central Bank to have to cut interest rates anytime soon, nor should they be worried about further future inflation pressures there either. The economy continues to tick along quite nicely, and services inflation of around about 3 to 3.5% doesn't really necessitate rate cuts. It's a very constructive backdrop for equities, and that's why we saw Eurozone equities outperform the US by around about 2 percentage points over the month of April. It's really reflecting this catch-up in growth. Now, we saw something similar in the UK. UK equities did very well as well, and that's because of this continuing rise in economic surprises here. More constructively for the UK, the fall in inflation looks likely to accelerate here through the month of May when we get the April numbers, because we're seeing a real slowdown, not just in food prices, but in high street retail price inflation, as well as these base effects from the fall in energy prices as last year's rise drops out. So it's a really constructive backdrop in the UK as well. Now, the challenge for the US is a bit more nuanced. We're likely to see some new communication from the Federal Reserve this evening with their interest rate decision. They're unlikely to change policy rates, but they're going to have to acknowledge a stronger economic backdrop there than was expected at the start of the year. Whilst GDP last week was slightly disappointing in the US, it really just signals that net imports were stronger than expected as retailers rebuild inventories, and in fact, GDP in the US continues to grow above trend. So again, no real need for rate cuts in the US either. So altogether, the global growth backdrop is very, very strong. And inflation worries are more likely to be pushed further out. To give you an example, oil prices actually fell through the month of April, and the gold price was only up around about 0.5 percentage point. So market worries about inflation remain, but it's really just with inflation being around about 3%, nowhere near the levels we saw in 2022. And that's because real GDP is taking hold, and we're really seeing improvement in the supply of labour within the workforce. And this is helping to keep a lid on those wage price inflation numbers that were a real concern mainly through 2022. So in summary, the global backdrop looks very strong for GDP. The global economy is in a great place, and all major regions are contributing constructively. Please join us tomorrow when we'll update you on the news from the Federal Reserve meeting, which comes out this evening. Thank you.